Dear judges, welcome to our Group 6 pitching presentation. And from a humble gold dealer that emerged in 1988 in Phú Nhuận district of HCMC to now standing as a game changer and an ambitious giant in Vietnam's jewelry retail segment. Rise and shine as gold, but also imply signals of uncertainties on the trading market. Today, we issue a sell recommendation for Phú Nhuận jewelry stock with a valuation price of 85.7 VND thousand, downsizing by 10.17% from the recommendation date based on the three investment tests. First, the new store opening strategy with the ample room for the triple SG would enable the retail segment to achieve a CAGR of 13%. And next, the rising gold bar revenue amidst the geopolitical uncertainty would pose hindrance to the NPM growth. And finally, the financial health coupled with the old information of potential mentions have merely reflected by market price.
Okay, now we come to the BNZ overview, which is a prominent company in the fragmented markets. And next box is the business descriptions. BNZ is the Vietnam jewelry producer and retailer of choice. Firstly, revenue stream come from the four segments, that's include retail, wholesale, 24K, and the others. Retail, the major segment of BNZ gold and silver jewelry industries with the big potential and progress. And outstanding distribution system in the Vietnam jewelry retail market from 2021 to 2023, BNZ maintains a consistent rate of the shop opening, serving 55 hours, 63 provinces and cities. And finally, BNZ have the different varieties value chain provide an edge in competition that come from the valuable resource. First one, the company owns a stable and reliable raw material supply. Secondly, a team of leading jewelry artisans, moreover, a manufacturing factory with the outstanding capacities. And finally, a leading distribution system. And moving to the macro and industry outlooks, the GDP growth is anticipated to be robust at 6.5%, subtracting continuation of economic expansion. It's also expected that there will be an increase in retail industry demonstrated by the boost in retail sales and GDP per capita. In general, the industry bust in 2023 with consumption of the market. Most companies have negative growth, but BNZ still maintain 10% store growth. It's also expected when the retail market recover, BNZ will able to have better revenue growth but start in the industries. And finally, in the figure 4, you can see before the COVID-19, customer tended to purchase jewelry or from the unbranded player. But after the pandemic, probably 40% of the customers shift to purchasing more jewelry in the branded player. That's compared to 20% before the COVID-19.
P&G is one of the few companies that have oriented its development toward ESG trends since a very early age, and P&G's commitment and action in the field of environment, society, and corporate governance have helped them break through and go far in the business race. We have resulted with the good performance in which score that our team had analyzed based on the MSCI criteria. And following the long-term goal, P&G is building momentum to enter the green market capital and realizing that it is an industry that had to explore a lot of non-renewable materials. Combined with that, the total output to meet the demand significantly increased. So P&G has a plan for efficiency use of energy. We can see that the average electricity, average gas or average gasoline used for per 1,000 products had a downward trend, thereby reducing the emission into the environment. And the emission intensity in 2021 and 2022 had decreased 3.23%. Moreover, P&G actively reduced these materials such as silver, gold, or diamond from recycling activities, heading toward circular economy. Moving to the next part, in the S pillar, P&G has implemented a series of diverse activities and at taking care of employees and the social community. We can see that they follow the core value that caring for mutual development, and they create policy on comprehensive employee health care called well-being, and especially that they didn't cut the employee salaries and bonus during the pandemic COVID-19. And we can see the result here, the employee turnover rate at P&G per year only 2 to 3%, and the labor productivity significantly increased 208%, and P&G successfully complete the SMETA criteria in 3 years. And with the G pillar, we can see that there is a high gender diversity in the BOD, indicating that a board composition is not heavily skewed toward one gender, which brings together different viewpoint and experience, leading a more well-rounded decision making. And we also can also see that the ownership is divided equally to other parties. There is no centralized power in only P&G, and ensuring the independence and comprehension for the strategy. Secondly, most of the shareholders are large organizations or investment fund, and you can see here is Dragon Capital, which when they hold a large share in a company, they will ensure the long-term goal of the stock price.
So about the investment thesis wise, this is about the new store opening strategies with the ample room for the same store sales growth, enable to the retail segment to achieve the CAGR to the ratio of 13%. So regarding to the first one, we can say that the assumption of pioneering positions coming from the numbers of P&Js. So let's we mention about some significant aspect of P&Js that differentiate is from another, as well as generate the competitive advantage for P&Gs. That is the store distribution system and high quality in production team. So up to now, P&Js have 402 store cover 55 provinces, increased about 8% compared to previous years. So this store coverage rate is much more outstanding than other competitors, especially in Southeast areas, particularly in Ho Chi Minh City, since SJCs and Doji only have 22 and 19 stores respectively. P&J has up to 105 stores. And regarding to the production team, in 2023, they are up to 160 jewelers of P&J recognized as a refined artist. And these features account for 70% of proportion of the refined jeweler of Vietnam. Furthermore, by receiving the awards of Golden Hands in jewelry industry and owning the advanced technique and equipment that can create the perfect craftsmanship on every detail, create on a brand intrinsic value for P&J. So this further affirms the P&J's superior competitiveness compared to its competitor. And for the short run outlooks, we can say that the proportion of 24K goals in this year's revenue structures is expected to increase significantly as the key driver for this year. So throughout the first quarters, the increase in 24K gold revenues by 66.3% due to the haste of customers' transaction is had currently led to the marginalizations of P&J gross profit machines, with the gross profit machine of the 24K gold business segment lingering below 1%. Furthermore, from the gold inputs of P&J's cost of goods sold come from raw gold materials. Any price movement exceeding 5% from P&J that adjusts the price, sometimes leading to the production capacity reduction. On the other side, with the 24K gold bar, this was not notable shift for the consumer behavior this year, with the consumer revenues purchasing for the 24 gold products with the investment demand. Thereby, in general, we can conclude that the driving revenue growth, but it not necessarily translating to the sustainable profit in jewelry industry. And last but not least, the potential of Vietnam jewelry markets is illustrated throughout this forecast for the jewelry consumption in Vietnam in the next 4 years. So it indicated that the consistently increase as well as the proportions of middle and affluent class intend to increase about 26% and 22% respectively. During the COVID pandemic, P&J took steps to increase the factory capacities, and is resulting in 1.5-fold expansion and meeting the current business needs. Looking ahead, P&J had the plan to build a new factory for their future growth.
The second investment thesis why we recommend selling is that the rising gold bar revenue in this geopolitical uncertainty pose a hindrance to the NPM growth. The macro outlook remains unexpected, with conditions primed for a favorable market for P&G if only as a dealer. So, we already know that during events of uncertainty, people will take shelter in certain classes of assets, including gold. And from our analysis, we know that there is a positive correlation between the sale of gold bar segment of P&G and the geopolitical uncertainty, because gold has been something proven to well perform during the period of black swan as investors usually view gold as a safe haven. However, recently, there's been a surge of drones and missiles heading toward Israel, mark a new phase of tension, uncertainty, and confrontation in the Middle East. Gold is poised to reach a new all-time high as trading resumes after the news, fueled by escalating demand for safe havens in the Middle East. The metal has already set records this year, with an increase of nearly 40% as of the current time in 2024. The result of this is that it further amplified the negative impact of the revenue of the 24K goal on the sale of retail segment, which is the main revenue driver and P&G overall profits.
And moving to our third investment thesis, that financial health coupled with cost leadership and competitive positioning have merely reflected by the market price. In the long run, the retail and gold bar segment are predicted to remain the key driver for the rising revenue from 2024 to 2028. So in the period of 2018 to 2023, the retail segment witnesses the dominance with the largest percentage in P&G's revenue structure, while the gold bar 24K segment continued to flourish to contribute the second highest revenue. Thereby, we predict that these two segments could maintain a two-digit CAGR of 12% in the period of 2024 to 2028. And next, P&G profitability will mainly driven by its well-positioned retail segment, result in the improved machine and internal source of funds. So the improved in the fashion jewelry product structure helps the retail gross profit machine increase year on year. And we forecast that the stronger retail revenue growth more than the wholesale and gold bars. Hereby, P&G could enjoy an attractive about 18% ROE throughout the period with effective net asset utilization and comparable level of leverage. So the last one, nonetheless, you can see from 2018 to 2024, the market price of P&G appears to completely represent this potential when the current trailing PE is lingering at its first standard deviation resistance.
With all that catalyst, we now have a strong foundation to find the intrinsic value of P&G. For the main earning driver of P&G, the retail segment, we will forecast to witness a slowdown due to the booming in revenue of the gold bar segment, which will negatively affect the retail segment because they are internal competitive. And for the WACC calculation, we use the risk-free rate in the 1 year rate of the Big Four bank in Vietnam. And for the equity risk premium, we use the rate for Professor Damodaran from University of New York. And so that we come with the WACC of 14%. And for the valuation, we use the mixed method combined with 50% weight of FCFF and forward PE. With that, we calculate the target price of P&G at 85.7 thousand Vietnam dong, representing a 10% downside. We also take some simulation to consolidate our valuation with its sensitivity, Monte Carlo simulation, and Brownian price path. We also employ a scenario analysis, and starting with the pool case, we expect the cancellation of the exclusive right of HGG to reduce gold bar. And with its first position in the competition and for reputation and market share, combined with more accessible price, P&G will now experience a higher revenue in retail segment. Moreover, the approval to allow P&G to import gold will be also widened its gross profit. And for a more difficult situation, we still calling a sale on P&G. Despite of the booming in the gold bars in the right now going up, but it's again negatively affect the retail segment, which is the main earning driver of the company. And for the worst scenario, HGG exclusive right will still be cancelled, but now P&G not on the list of the allowed business to reduce. It will lead to the huge damage to the company reputation, and combined with the geopolitical instability, which leads to gold bar right now increase sadly, will devastate the company performance. From all our tests and analysis, we are now calling a sell on P&G stock at the target price at 85.7 thousand Vietnam dong, represent a 10% downside. P&G is still a very successful company, but we believe that there is too many uncertainty ahead, and the market have already reflect on its intrinsic value into its drive. Ladies and gentlemen, this is also the end of our presentation. Thank you for listening.